Welcome, everybody, to the Chinchilla Pickin' Podcast. It is July the 20th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am here with Brandon Beaver. Brandon, is it hot or is it not?
It's hot. It's hot. And I'm bored, Dave.
I am too.
I'm bored. Here's the thing. So Warren Buffett once said every once in a while, storm clouds will gather and the sky will rain gold. And this bear market is not raining gold for me, Dave. I'm doing okay, but it's giving me more like palladium. I want gold.
I tell you what, I was in a slump the past month, and I have bounced hard out of that slump. A lot of my positions turned profitable. I am very happy where I'm at right now, and I feel like jumping around, and now I'm got cash ready to be played back in.
I did not slump hard enough. I need more deals. I need more deals. And yeah, I might break even now on Meta, which I didn't think that was going to happen that fast, but I am, and that's fine. I'm great with it, but I would have much rather have been able to buy Apple at 122.
Right. So you and everybody else.
So, but it still might happen. I don't really trust this rally right now. I don't think that we're going to continue higher. I think this is a bear market rally. I could be wrong. I hope I'm right.
Well, we'll see. Before we get into it, 'cause it sounds like you want to get right into it. Let me go over the rules, guys. Everybody knows the rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We saved the live discussion for you here on the show. We apologize. There's been a little bit of time in between shows recently. I got on Instagram, and I explained that Brandon was having trouble breathing, and I can't work technology. So those two things combined just couldn't make me get a show put in. But, hey, we're back. If you like what you hear, as always, hit subscribe button. Follow us. We're on StockTwits and Instagram, and you can find us, follow us, like us, go on and go forth.
And don't worry, it's not cancer. I smoke a lot of cigarettes on this podcast, but it's not lung cancer yet. I just
need to quit. You do
need a rib injury.
On behalf of all of our listeners, you need to quit. So that's what I would like to say. I do not smoke, so yeah. But yet my voice sounds worse than yours. I don't get that at all.
It's the smoke, man. It's the smoke. I'm gruff and masculine on the mic because
there you go. That's it. So Brandon, you're going to lead us off on the show. You have the thickest, deepest topics here. So I'm going to let you go. And you're sporting a nice little look there. Look like you're from the 1970s, which is kind of where our economy's from, right?
My haircut's coming next couple days. I need to look professional again.
No, you don't.
I'm a manager. I need to look professional. So the S&P 500, I bought SPY 2 weeks ago, maybe 3 weeks ago on the show, and I announced it when I did it. And it was big news to me because I hadn't bought SPY in a very long time, since pre-COVID. And I think I'd played maybe calls or something on it during the COVID downturn. And when we were in that awkward V-shaped recovery, whatever it was. But I bought SPY. It's up 7%. I still don't think I'm going to sell it, but I don't trust this rally right now. I don't trust it. I think oil prices are in a lull. I think China is going to come back online. COVID hit China again. There's some partial lockdowns happening right now. Mandatory testing and all that stuff is weighing on oil. Russian oil is not fully coming back to the United States or to Europe. And next month's inflation reading is probably going to be a little bit lower. We may have hit peak inflation, but I still go ahead, Dave. I'm kind of rambling.
No. It was about the oil. So you know me. If you've listened to this show at all, you know I follow oil like nothing, right? So I'm always watching oil. So you mentioned you think oil has more growth to go, right? Here's a couple of my concerns with that. I know Biden was recently in Saudi Arabia trying to reach out with them. I know eventually that they're going to have to let us empty out our drill in here. But I think one of the biggest concerns that's going to really force Russia to pause or put a halt to their movement is the news today that the Chechen rebels are going to be using this opportunity to go ahead and mount an attack against the Russian government.
Oh, wow.
That was a news. It broke out today on the news wires. I read a couple articles on it. If it is true, and that is what's going to happen, that would put Russia in a bind. And then Russia would definitely need to think about pausing or halting or even pulling back out of Ukraine, which in turn would cause oil to drop because that would meet the needs of what everybody who has an embargo on Russia right now has said is pull out of Ukraine and we'll buy your oil again. So I don't know. There's hope. There's hope. There's a light at the end of the tunnel.
There is.
But yet they're being forced into that corner. So I don't know how reliable this information is.
I think we're going to get one more scare. And I think it's going to happen when China starts to open more back up and COVID restrictions again start to ease. And then oil will start to go back up again. I don't think it'll stay there. Oil is not the future here. I think it's going to be more like coal and nuclear energy powering our electric cars and things like that. But for now, it's going to be. I think the oil still got a little bit more to run. And,
BP says even if you cut out the BP CEO went on TV and said that even if you turned all cars into electric, we would still be profitable for the next 40 years.
Okay, that's great,
least.
but the price of oil is not going to be as high.
It shouldn't be. Yeah, if there's not that much demand as far as like cars using it, then yes.
Yeah.
It'll be a lower demand, but they said they will still be profitable because there's so many other uses for oil that we still need and require as a society.
Well, yeah, it's never going to go away. It's in your paint, it's in your steel, it's in your rubber.
So as far as your oil comment, yes and no. Yes, there is a chance it will bounce back up again, especially if Russia can fights a battle on both fronts, then yeah. But no, if Russia sees this new Chechen development and says, you know what, let's just pause and halt for a while. That would be some good news for the markets.
So here, I think it's going to be interesting next month to see this month's inflation report, because I don't think it's going to be 9.3%. I think it's going to drop because oil's dropped and prices have come down a little bit since last month. So how do you play this market right now? I tell you, dollar also points to peak inflation. That shows that I might be wrong even about oil here. If the dollar continues to gain value, we just had it, it was equal in value to the euro. So the euro has always been more valuable than the dollar.
But one of the things you mentioned earlier, and you mentioned this was the SPY, the SBY. It's an ETF. So those of you who are listening, if you never traded a SPY, it's an ETF. Basically follows the S&P, right? That's basically how it works, and it's just a fund that you could get into. I'm going to go back to recession back in 2008, right? If you would have bought the SPY in March of 2009, it would have been at $79.52. And in just 2 years, you would have doubled. And that's not even including dividends. That's just the stock price. That's no dividends at all. So during a time of recession where there's a V or a U in the economy, the SPY is a good play.
Yeah.
And it's a safer play to put your money in and let it go to work for the recovery at the other end, because the S&P 500 shuffles out those companies in and out. It keeps just 500. There's a reason why there's 500 at the end of it. And it's not always the same 500. So they're always shuffling what they have, such as the SPY is always shuffling what it has. And so you're going to get a good mix without having to do a lot of the work. And it's a good buy at a bottom of a recession. And whether or not this is an actual true recession, we will find out Monday when the GDP numbers come out. And if it's negative, then that means we're technically in the definition of a recession. And you and I were right all along.
Yeah. What's your prediction there?
It's going to be negative.
You think it's negative? Okay.
Yep.
All right.
I'm very confident it's going to be negative.
So then the stock market will probably react a little negatively to that, depending on how negative it is.
I don't know. I mean, we could already be plateauing, bottoming, and they might go down a little bit, they might go up a little bit. You don't know how they're going to react.
This feels like a head fake to me, though. This doesn't feel like it's a sustainable rally.
Yeah, I don't get the feeling either that it's a sustainable rally, but you got to look at the actual economics of the situation, right?
Yeah.
How many companies have already done their job cuts that you would see during a recession,
Quite
or
a
they're hiring freezes, or
Yeah.
companies are filing for Chapter 11 or Chapter 12. There's already been a few. There's already been a handful. Ford announced 5,000 job cuts. So, I mean, there's already been job cuts across the board. Lyft, they cut all their workers for their I don't know if it was, I forget what it was, but they had a service they were providing that they cut. So there's companies out there cutting services. They've already made the cuts. They're trying to keep their bottom line number where it is, even though their top line number is shrinking. They want to keep the bottom line number what it is. Companies are better resolved and acting quicker than they were just 20 years ago.
So let me lay out two scenarios here for you. Recession or not, okay? Two scenarios. Number one, inflation's peaked. Dollar continues to rally, right? What happens then? We've kind of been through this before. We haven't been through it at 9.3% inflation, but we've been through a strong dollar rally before. I'm thinking back to about 2014. My memory is crazy. I can't remember what I had for lunch yesterday, but I can remember what happened, 8 years on the stock market. But anyways, 2014, strong dollar rally, consumer staples suffered. And that's because with consumer staples like Coca-Cola, Procter & Gamble, a large portion of their business comes from overseas. And a stronger dollar makes it harder to do business overseas because it makes it more expensive. So inflation continues to show that it's peaked. A dollar starts to rally. Then you might start to see the FANG names pick up more speed. But your Coca-Colas and your Procter & Gambles and all of that stuff are going to, the safe havens, the consumer staples, those are going to suffer. If inflation has not peaked and we continue to get a rise, maybe with next month's report, which will be for this month, the inflation for this month, maybe we'll see that, inflation has slowed down a little bit, but maybe it's a temporary lull. You might get a better deal on Coke and Procter & Gamble if you believe that inflation has not peaked yet. Then those would be the best areas to go shopping for deals. I started looking yesterday at US Steel for the same reason. Steel prices have came down this year. They peaked, it seems like, last year and mostly through 2021. But since the beginning of the year, they've come down. I was looking at US Steel's balance sheet here. Let me pull it up so I get the numbers correct.
Hey, while you're pulling that up, man, steel is that traded on the commodities exchange as a commodity?
That's actually a good question. I don't know. You can look up the price of steel per pound on Google, which is what I was doing, and you can chart it, but I don't actually know if you can buy it as a commodity.
Because isn't all commodities based off the price of the cost of a US dollar?
Yes.
Right. So, I mean, that has a big effect on the commodity prices. And if the commodity prices are affected by, you know what I mean?
So if the US dollar continues to rise, then steel
they
prices
should go down.
Right.
No, they should go down. Yeah.
But here's the thing with.
So then US Steel wouldn't be a good buy.
Depends. Okay. Depends on how valuable you're seeing this company right now. Price to sales right now, somewhere around like 0.3. It's super low. It's down 10% for the year. So if you're looking at it for a long-term hold and the price to book being below 1, price to earnings right now is like 3. My first concern with this that I was looking at was that earnings may have peaked last year because steel had increased so much in price that, the price to earnings ratio is going to look better than what it actually is for the company. And so will the price to sales. And so look at this. In 2021, their revenue was $20.275 billion. In 2020, it was $9.741 billion. And if you want to go past the pandemic, 2019, it was $12.937 billion. So from $12.937 billion in revenue in 2019 to $20 billion in 2021, to me, I was looking at it thinking this could be a bull trap, and I could be buying just after peak earnings, which is something I don't want to do. So what I went and did to try to normalize these ratios and make them make more sense, I used their 2019 numbers instead. And still what I was getting was a price to book less than 1 and a price to sales around 0.5. So you're paying with this stock price right now for only half of their earnings, and actually less than half their earnings in 2019, because the stock, the market cap on this stock is just a little bit above 5 billion right now. So I still think this could be a good deal. And I was looking at their debt to equity, debt to EBITDA, and all that stuff. All that stuff looked good. My only concern right now, and what I'm trying to figure out, is why when the street issued their report last month, they gave it a solvency rating of 1 out of 5 stars. And I haven't figured out why yet. As soon as I figure that out, and if it's relevant, then maybe I'll post it to our Instagram or to our stock twits or something. So
Supply chain, man.
What's
Supply
that?
chain. They can't get steel to companies. There's a backlog of steel all across America. There's a supply chain issue. Until the supply chain's worked out, they can't actually take advantage of higher prices and steel right now, just because of that. There's just too much of a backlog. They can't make it. They can't get it to the businesses that want it. They can't do it.
But that wouldn't affect their solvency, though.
No,
So
but I mean, it wouldn't affect their solvency. But I mean, it's a big industry for large market cap. But if I have this hot product, right, this new greatest phone or something, right, but I can't make the phone.
Yeah.
I mean, I can't make sales. Then I can't get revenue. I can't,
right.
I mean,
Okay.
That's where I'm going with it. Now, as far as the solvency, why they gave him that on the solvency, I wouldn't know without looking into it. Maybe there's some debt out there that was not reported, or maybe they something with the shares and agreements they have and warrants and all that. I don't know. I would have to look into it.
So here's another thing that I found about it too. They had 108% increase in sales in 2021, which was actually, like, you think, oh, that's great. But to me, it was a red flag, because once again, I don't want to be buying after peak. I want to buy before peak, before everybody else has figured out that it's peaked, or, hopefully there's no peak and we just continue to go up. But 108% sales increase in 2021, but a very large percentage of this increase in revenue was the acquisition of Big River Steel. So in what CFRA reported on this is that this actually helped to drive a majority of that 108% increase. And they're expecting US Steel to grow another 10% this year. So not a decline in revenue here, another 10% growth in revenue despite steel prices coming down. So this to me so far is looking like a pretty good deal, but I just wanted to take people on the trip of my thought process here and understand that anytime you see it's such a huge increase of revenue in such a small amount of time, especially on a company that deals in commodities and metals and things like that, it should raise a red flag to you that you could be going in what's a bull trap. And you asked me this before the show. Can I explain what a bull trap is? Yeah. So price to earnings ratio looks low. Price to book looks low. Price to sales looks low. Oftentimes it's because their earnings were unreasonably and abnormally high. And it's not something that's going to continue in the future. And that makes, when the earnings go up relative to the price, that makes those ratios look a lot better than what they actually should look. And that's why I went back to 2019, because in 2019 we had normalized steel price. Well, more normalized steel prices. Still had the China tariffs in effect and all of that stuff, but it was more normal than the crazy, 2 years that happened afterwards in 2020 and 2021.
Gotcha. Yeah, and it's been a crazy 2 years, and it's going to continue to be crazy until this inflation gets worked through here.
So if you think that inflation has not peaked, US Steel is probably a good deal right now.
Nice. So, hey, I want to say, look, a lot of people have been criticizing the government about this inflation and everything. So I want to bring you a quote from Kathy Wood of ARC Innovation. And this is her quote from 4 weeks ago. And it says, start quote, "It moves already are more draconian and this is regarding the Fed, than the Volckers. The Fed seems to be more worried about its legacy than the economy." You hate to be somewhat political. I know she never likes to be political, and I know she agrees with the current administration on a lot of things. But even she is critical of the Fed and how slow they've moved on the inflation, and now they're finally getting it right. And now they're going to overdo it, and then you said that would cause us in hyper deflation. Yeah. So now we're just going to have a very rough landing. It's what you were saying if they continue down that path.
Yeah.
Do you still see that as the possible endpoint? Do you agree with Kathy that the Fed's not making the right moves here? They're doing things wrong, and that's a possible endpoint.
It is a possible endpoint. I don't really agree with Kathy because I think she's got ulterior motives here. I think she's mad that the Fed is sucking all of the speculation out of the market. Despite the past week's rally, I mean, obviously there's still the GameStops and the meme stocks and all that, but the speculation she was really benefiting from it with ARC. She was really making a lot of money with all the speculation that was happening, and with the raising the interest rates, that's cutting into that. And that's why I think she's got a sour mood on it. I don't think it's any real intellectual honesty there. I think it's
so she's just trying to make headlines and persuade the Fed publicly.
Yeah, and we're at 9.3% inflation for last month, and there's a good possibility that this month, like I said, is going to be lower because oil prices have come down, inventories have increased, and all of that stuff. But you can't say that with any certainty that the Fed has been too aggressive yet, when you're still at 9.3% inflation. And forget about 2% inflation, which is the Fed's goal. 5% inflation seems like it's miles away from here right now.
So you believe the Fed should be even more bigger moves?
Yeah, because they have to catch up with the fact that they were too slow. I would not mind seeing 100 basis points raise, 1% interest rates.
I agree with you. I want to see 100 basis points as well, which is a 1% raise for those who listen.
But let me just say this real quick. The free market could handle interest rates if the Federal Reserve did not exist. And the Federal Reserve is constantly trying to walk a balance between too much and too little when it comes to interest rates, too high, too low. And if they teeter on either side of this balance beam, then the market implodes.
I'm just worried that the wages have not kept up with the costs of housing over the last 2 years. So wages have gone up. Yes, they've gone up at the bottom levels. But, instead of like a lot of places now have a minimum starting wage of $15, $17 an hour. But I mean, housing prices have gone up almost 80, 90% in some areas, and it doesn't keep up. It just doesn't keep up. So wages are not catching up with the cost of housing, which is why I believe I brought up housing in this discussion, because it needs to come down. Cost of housing, if we're going to have an actual recovery here, we need to start thinking about the recovery and not so much about right now, because I believe Fed raising rates, wages staying where they're at right now. They jumped up from the COVID, but now they stagnated. I believe that, all that's going to cause the economy to come to a halt. I believe we're going to bottom out and we're going to start moving in the right direction come October. I'm more worried about the other end of the deal, and housing prices need to drop.
Absolutely. We're creating more homeless right now. People don't think that way.
So
because it's harder to get into a home. It's harder to rent right now too.
Yeah.
So buy what's on sale. That's what you do. All of the speculation that I've just been talking about, is oil going to go back higher? Is inflation going to peak? This is just me preparing my mindset for what to look for in the future. So if consumer staples suffer because of a strong dollar rally, Then I might get Coca-Cola, Procter and Gamble, and the consumer staples on sale. So I'm not saying to stay away from them necessarily. I'm just saying you might get better deals in the future. So when the strong dollar does rally, if you get a good deal on Coca-Cola, you can buy it up.
Now, if the dollar goes up in price, is oil going to stay high? Because you say inflation, this is just a lull. Oil is most likely going to move higher. I said yes and no. There's too many global geopolitical events that could affect it. So I can't call it, but you're thinking that it will. Will a stronger dollar have a big enough effect on the oil that you actually stay away?
It'll cap it. But the inflation expectation that inflation continues to go higher is that the dollar rally right now isn't sustainable, and that it eventually that'll taper off. I don't know if that's going to happen either, because the Fed's raising rates on a pretty consistent basis right now. I'm just laying out scenarios so that people are prepared for what might happen in the future. I'm not telling you to sell your stocks based on it. I'm telling you to raise money and get ready for deals in certain sectors.
I tell you what, I sold some profitable stocks this week. I took my profit off the table.
I sold Delta. If we would have had this show 2 weeks ago, I would have told everybody to buy Delta. You'd all have a 13% gain right now. I posted it on my Facebook.
But you did not post on StockTwits or Instagram.
No. I did post it on Twitter. If you want to follow me at Captain Showstopper.
Oh no, don't do that. Don't.
Let's talk. Let me talk a little bit about that. The whole reason why I bought Delta, this was prior to earnings. Everybody was worried about the cost of oil and everything, but oil had come down. But the Delta CEO was at the Bernstein 38th Strategic Decisions Conference, and he gave a rather rosy outlook on it. They have a new airlines terminal at LaGuardia. He says LaGuardia will become the best airport in the country. Out of all of this, out of all these predictions, that Delta will have profitability this year, $1.4 billion of free cash flow for the quarter, which they did have. LaGuardia becoming the best airport in the country was the biggest news to me.
Right? That's news to me too, because I've been there, and I wouldn't rate that as the best, but I haven't been there in a while, so I don't know. Maybe there's been improvements.
So I've never been to LaGuardia, but the LaGuardia, the whole reason I've never been to LaGuardia is because everybody has always told me to use JFK at New York and to stay away from LaGuardia. Wow. I can't pronounce anything right now. I think I'm tired. I think that's what it is. Today's market semi-rally combined with yesterday, very boring to me. I have a week off from work, and I was really hoping for a good deal on the stock market. I'm very disappointed. Anyways, so here's the reasons for buying this and what I did. Okay, the reason why I did it. He said that Delta would come in at the top end of their operating margin guidance, somewhere around 14% for the quarter. They were close to it. He said as far as demand goes, they've never seen anything on the scale. Their consumer is quite healthy. 1/3 of the demand is coming from premium sectors in their company. So, the first class seats and stuff like that. That's a high amount of demand for it. And honestly, if you look at the trends in the airline industry, once people buy first class seats and start buying the premium services from the airlines, they generally don't stop. They don't downgrade back to coach. So
I mean, I covered this.
It's sticky revenue.
Yeah, and I covered this in the fall of last year about how people are sick and tired of the commercial airlines, and that how the private charter system is coming down in price, and now it's closer for those people who buy in first class seats and business class seats. It's almost to the point where they're going to start getting these wheels up memberships or these, badget memberships, and they're going to start just flying that way, so they don't have to deal with anything at airports anymore.
Yeah. And what he said too was, with the return of business travel, businesses and everyday flyers are battling each other right now for first class and business class seats.
Mm-hmm.
So it's given them pricing room. They can raise prices right now because there's so much demand for those premium services on the airplanes with retail customers, regular you and me, coming on and buying those people that never did it before. And now businesses are having to compete with that to try to get their employees into business class. So he said they're going to have a pretty good, healthy run here for quite some time. There's a new LAX airport. What I like about this new LAX airport, the new terminal at LaGuardia, all of these things were financed with interest rates that were locked in 2020. So their
So they got low rates.
Yeah, they got low rates on it. They're locked in at 2020 levels. They're not going up. They're not paying high interest rates. Interest rates are going up right now and all that stuff. He said Europe's on fire. Demand to travel to Europe is very, very high right now, and the same indications that Asia will experience the same demand. So I bought it before earnings, sold it for the 13% gain. If you bought it in the 29s, that's great. If you're one of the people that are on my Facebook, you could probably hold it here. And you still have a pretty good deal on it. The price to sales ratio when I bought it was around 0.58. So you're paying for 58% of the revenue. That's like buying $1 with 58 cents. It's a good deal, one thing, I love ratios. I know most people don't, but I want to discuss this a little bit. Dave, you're already starting to fall asleep, but that's fine. The price to book ratio here, the price to book ratio on Delta was 6, which is incredibly high. A 6 says overvalued. A price to sales ratio under 1 says undervalued. And it's very rare to have both for the same company. Price to sales ratio was like 0.58. Price to book was like 6. But
some's throwing off the numbers.
What threw it off was all of the cutbacks the airlines made during COVID. Their book value right now is a lot lower because they don't have as many expenses. It's one of the reasons why travelers are getting caught up in record amounts of delays and all that stuff. So
yeah, I tell you what, I just went on a flight recently, and as soon as I checked in 24 hours ahead of time on my phone, the first thing that popped up was immediately. I mean, this was 24 hours ahead of time. We'll offer you $600 to switch your flight right away. Right away. I was like, what?
Okay.
And then I was like, well, let's hold off and let's wait to see if you give me that 10 grand at the last minute or something.
This was another one of those weird scenarios that COVID produced.
Yeah.
At a price to book value at 6, it looks super expensive. But then once you saw the price to sales at 0.58, you realized actually it made it cheaper.
Yep. But American beat them on the recent earnings report. American had a great earnings report versus Delta's in comparison.
Well, American's
what's up with that? Because I thought I've always had Delta as a higher end company than American.
It is, but American's got more depth. And there was a lot more fire and brimstone built into the American Airlines stock than there was Delta. So Delta clearly from 45 down to 29 experienced a huge fall there. But American, people were just kind of expecting that if any of the major airlines was going to fail, it was going to be them.
Yeah, I mean, I said that too.
It wouldn't have been United. It wouldn't have been Delta. It wouldn't have been any of those.
I mean, maybe Allegiant or Spirit, but now those are trying to combine into one.
Yeah. The discounts. Now, why did I sell it? I sold it because I don't like being in competitive industries. The airline industry is very, very competitive. I still think that this thing could have a long way to go, but I'd rather be in a company that has its market cornered.
All right. If you don't mind, give me 2 minutes to talk about RIOT, and then we can do our final thought, if you don't mind. So on Instagram, I was keeping up with this on Instagram, guys. So if you follow us on Instagram at Chinchilla Pickin', you would have seen posts from me saying, hey, buy RIOT now, right? RIOT went down. I did not call the bottom. I'm never good at calling the bottom. It went down. And I just knew, though, that this was, right near the bottom. So I bought more, lowered my cost basis, and then I bought a little bit more, lowered my cost basis. And then the past 3 days, it has shot back up because I knew levels of Bitcoin had reached a point to where all of these miners and everybody else would have sold enough Bitcoin that they had to cover their expenses, and they didn't need to sell anymore. Right? They started, the cryptocurrency started weeding out all these businesses disappearing, which is what needed to happen. It was healthy for the marketplace. I still believe some more of it needs to happen, but enough of it happened to where there was a good opportunity to get in, and it was going to go bounce back up. Most companies, I'm talking about most financial firms, have a price target of Riot over $10 a share. And that's, I would say, of all the ones I've looked at, I have not found a single financial company yet that has a price target of Riot below 10. Not one I've seen yet. If you know of one, DM us to let me know, because I want to know. All of them are over $10 a share. Most of them are at $15 a share. Right now, today was at $7 and change. So if you followed the Instagram post and you saw that I was calling it when it was around 570, you would be making money right now. And I would say, good time to take some profit off the table. I took my profit off the table. I now have cash on hand. I'm looking for my next opportunity. Like Brandon says, there might be another drop in the market, but I'm just throwing that out there that was on Instagram. So if you follow us on Instagram, you would have saw that trade. You would have got in the trade. And then I called when to start selling, when it was a good time to start selling. So follow us everywhere, Stock Twits and Instagram. Brandon, it seems like you have something you want to say to that.
Seeing is not believing. Okay. You have to read into it. You have to analyze it. United States Steel seemed like it could be a bull trap to me. It doesn't look like it's going to be, but you're going to have a lot of companies that are like that, especially in the commodity space, that had peak earnings last year and may never return to those earnings levels again. So just because you got a low price to earnings ratio and price to book and price to sales, that doesn't mean that you should buy. You need to look into it more and try to figure out what the reasons for those are. Other than that, the numbers in your analysis won't lie to you. The speculation that I do on the shows specifically to prepare you for what could happen in the future. So get the consumer staples on your watch list, and get ready for deals if the dollar continues to rise. And generally speaking, tech doesn't do so well either if the dollar starts to go on a rise. But in this case, if the dollar continues its strength, then what people are going to start thinking is that the Fed might back off. So with 9.3% inflation and a strong dollar, if the strong dollar continues, it's probably actually going to be good for the FANG stocks.
Yep. I'll tell you my final thought, Brandon, is I exited a position in Riot that I was profitable. It's always a good time to take some profit off the table if you're worried about the near term or even long term future. If you see some trouble ahead, take some profit off, take it off. But what I'm looking at going forward is SPY. I mentioned what it did in the recession of 2009. We're in a recession right now. It's a good time to buy. I think we are. It would be a good time to buy, and then you could hold it, and you could double in 2 years, maybe not. I don't know, but you will make money. It will be a good time to buy and get in, and you will make money if you hold it for a long-term investment. I'm looking at a bunch of other ones. I'm staying away from retail right now. I still don't believe retail is a good one. But am I buying oil companies right now? No. I'm watching and waiting. Too many geopolitical events. I don't know what's going to happen. So I'm staying away, but I'm watching. They're on my watch list. I'm more right now looking at the chip sector. I know a lot of political news came out of certain politicians and their family members buying NVIDIA. I own NVIDIA. I would be happy if they bought more of NVIDIA, but that's that.
The greatest stock trader in the world.
Yes. I'm looking at those kind of companies as buy, but the only call I'm making on the show today is SPY, and it's a long-term call. It's not a short-term play. All right.
Yeah, I agree. Yeah, I got in at 367, so I'm happy right now, but I wish I would have been able to buy more before it went higher. I didn't get a chance to get to the last subject that I had here, which is really going to irritate the meme stock people again, but don't worry. If I don't get to it to the next show, I'll do it before the next show as like a 10-15 minute break with Brandon. So
There you go. And you can also post it on StockTwits and really get to them.
Yeah.
All right, guys. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.
So, I mean, what do you buy in these markets, right? What do you buy? We talked about SPY, SBY. That was one. You know, what's another one you're looking at buying right now, Brandon? Any ideas? Would you still buy Apple at this price?
No.
No, really?
No. I need it to come back down. I need it to come down a little bit more. And we all know that eventually, if you just wait it out, eventually you'll get a good price on it. Even if at some point in time when I buy it, the price is higher than what it is right now, maybe the earnings have caught up with it. And because I don't value a stock based on the price. I value it based on their earnings and the revenue and the ratios of price to earnings, price to sales, and all that stuff. PE's a little too high for me right now. I wish I would have bought it 2 weeks ago, but I didn't. I was distracted by other things and other stocks and all of that stuff. But I mean, hey, if you want to buy Apple right now and then just maybe add to it every 6 months or something like that, it's a safe stock to do it with. I just think that there's going to be better deals in the future. If we get a, confirmation on the recession on Monday, you're probably going to get better deals. We had a recession priced in this week and a half. I think we've taken that out. I think they've priced in now a soft landing rather than a hard landing. So I'm not buying Apple. I'm still probably going to buy US Steel here, whether or not I think inflation has peaked, just because of the valuation. And that's where I would tell people to go. You buy what's on sale.